Hi, this is Daniel, and this is the review of Friday's price action. This is um this is ES futures on a 5 minute chart. And just to preface, I'm not a professional. I've only been learning for a few months, so this is just my analysis of using Albrex's models. And so, start today. Thursday was the opening reversal, it's a trading range, and so today could really be anything. Could continue the trading range. So let's see what happened. So bar one was long tail, decent bear bar. Just saw the close of. But one and two really limits the downside. Large wicks. Or a decent follow through, but five is a large bull bar. Five is not really optimal for buying either. It's a pretty big bar, but we just saw pretty bearish. Bar five just really shows that it limits just the downside of this initial bear push. Bar six, lack of follow through, suggests that a bull trend is highly unlikely. Bar seven, double bottom, large wicks in the bottom, showing that bears are also having trouble pushing the price down. Bar eight, inside bar, trading range bar. Bar nine, outside bar. If this was smaller, it would be a better buy, but it's so big, it's a pretty large stop. So buying to close or just buying to close is just hard. So I personally did not take this, but your R would be pretty low, and you might have to scale in. Bar 10, follow through, 11, 12 for consecutive bull bars, but they're getting smaller and smaller. That limits the upside. Probably gonna test the high of bar one, which we do with double top. Decent reversal bar. Could short on the first entry short or on a confirmation from here, down here. And there's a lot of wicks, so limit order trading would be pretty good, or you just avoid this in general if you use stop orders. Bar 16, pullback, but we just inside bar, another inside bar. There's a lot of bars below and around the wick of bar 15. 18 bull bar, outside bar. But these wicks limit the upside. It's a big bar. And the upside is only the high of bar 13. So only like 5 points. First entry, long, above bar 19. Another outside bar, but it's just hard to take. We are in a slight uptrend, the trend line. Bar 22, we test, we form a wedge. And bar 24 is a 2 bar reversal, completely engulfing the last 3 bars. You can decent buy to close. You can buy to close at 25 too, as we broke out of this trend or the trend line. We also have the wedge. So this or this, these are both decent entry bars for bears. Bar 26 consecutive, testing the low of bar 15. We see there's some resistance on the low of the day. That was bar 7, seen by bar 27, bouncing back. So this is a macro breakout pullback as we broke below bar 15. We pulled back with the implied pullback for entry short on bar 20 and bar 29. Now we get a second leg, 4 bar macro channel following a 3 bar macro channel, which is down to here, about 30, bar 32. Wicks, not really good for the hard to sell the close or stop orders below these because we've gone down for a while. So we will anticipate a reversal, but just a pullback, right? Not a full reversal. So we get that on bar 33. But bar 34 is a micro double top, lack of follow through, and it's a breaking out of the initial range. So I have this measure, and this is a target, this measure move. This is measure move of the prior range. Now we don't really achieve it today. We get close. Now we have this breakout below the earlier range, and we pulled back up to bar 34. 35 is not good for either the bears or the bulls. The bears want to see some follow through, but the bulls want to see a follow through of bar 33. And so we're not breaking above this support or this resistance of this line. 36 is the follow through. I entered on a market for this breakout pullback essentially for 1 hour, and we get decent follow through until bar 39. However, there is sort of wedge going on, and 40 cements that the downside is limited. It's a big bull bar, and you could have bought the close of bar 40, entry bar 41. But your upside is pretty limited, which would be this magnet that closes bar 33, which is the first break-even point. And to close the bar 41 would eventually be a break-even point. 42 lack of follow-through, and 43 traps these bears, these bulls. So you'd want to see price return to this line and this line in the future. 43 lacks follow-through, 44, 45, probably getting a small second leg. You have another wedge, complex wedge going on. You got another leg, the bar 43 getting another leg. You have a double bottom, but it's hard to buy above bar 49. Large tails. Probably could have scaled in if you bought above bar 40 on these first entries. Bar 41, bar 51, 52, 53. Consecutive bull bars, good for the bulls. But we meet resistance on this line, the high of bar 41. Could you buy the close of bar 43? This bar is pretty big, a little bigger than the other ones. So it could be seen as climactic. 44. Hard to sell this. The close of 42 or stop, or hard to sell the first entry short because you've had 5 consecutive bull bars. Can't really buy below it either. Bar 43. The lack of follow through on bar 46. First entry long on bar 47. I personally bought the first entry long, but I wouldn't say this is a particularly good trade either. The upside is limited. We have a wedge top. We have this equal highs, and we're currently in a trading range, right? And this is the trading range line. And everywhere, every one of these highs serves as resistance. So I took a scalp essentially for 1R. I actually had my original targets at this high, at bar 33, but it went down. One take away from my stop and went up, and I took profits. I I actually moved my targets after this pullback to 1R. I got out on bar 68. Now we have 5 consecutive bear bars, but they are prominent tails, and so it's hard to buy above bar. It's hard taking this first entry on bar 65. Now buying a close at bar 65 is a little better because this is a better looking bull bar, but it wouldn't be the highest probability, or the upside is pretty limited, which would be this high, or this wedge, another wedge. Now, 69 is a nice bull breakout bar, breaking above the high of bar 59, and retesting the close of bar 33. However, since there are buyers here who would get break even, this pushes prices back down, and because we have a wedge, I actually see this as a decent first entry short, as we have this line right here, which is resistance, the trading range line, and it's pretty decent to sell on the top half of the trading range, and we have a wedge going on. Now bar 69 is pretty big, so it is hard to sell it, but you can see this bar as pretty exhaustive, right? So you could short this bar. Now went down for blue bar sideways down. At this point, it's too late. So yeah, as for Friday, in terms of the trades you could take, we take yeah, you could buy to close at bar 9, but you'd have to be okay with a larger risk, a larger stop, smaller risk, limited upside. We also have to close at bar 14, confirmation, or first entry short. We could wait for the first entry short, or we could also wait for the confirmation bar 14. You see the long tails, these are reversal bar at resistance, double top. There's definitely some downside. The bulls are limited with the smaller bodies. We also short at the close of bar 24, 25, 26, or even this first entry short. Very strong bull bars breaking below the trend line with a wedge top. You can short the first entry short below bar 34, or confirmation close at bar 36. Good downside, especially going for the measurement move target. You could long the close at bar 40, but it's a pretty tight channel prior, even though it's a large bar. And you do get some follow through, but you'd either have to scalp or scale in later. Lower low is created, lower low, double bottom, but these aren't really any good bars to buy. I personally wouldn't take this first entry long, or this one. It just doesn't look very good. The signal bars are not very good, pretty poor for the bulls. But you could short the wedge, close the bar. You could take the first entry short below bar 59. The bar 58 is pretty big, and there's limited downside since we have a lower low, I mean a higher low. So I personally wouldn't take this one because bar 58 is so big, and our downside is limited. So you have a higher low. Percentage short bar 70, 71 on the other hand is better. We're at the top half of the range. We have a complex wedge, and it reaches the break-even point bar 33. So there is definitely resistance up here, as it was the original low of the prior trading range, forms the resistance of this new trading range. And so we close the bar 70 or 71 are decent shorts, but that would be limited since close to the end of the day. And so yeah, thank you for watching. We will see you. I'll see you if there's anybody listening on Monday. Thank you.